Welcome back to Market Call tonight. All right, time for past picks, and let's go back to May 25th, almost exactly a year ago today, when David recommended Medtronic. So let's see how that one's performed in the months since. A total return of 7%.
Yeah, we really like the medical device space. So if I were to buy something today, I probably would buy a Stryker, SYK in New York. It's orthopedic implantable devices. The nice thing about devices is that it's not completely dependent on insurance pays. So there's secular growth, of course, of people getting hips and knees done or implants in their vascular systems. And so this is something that's going to, almost certainly grow and become a much bigger market. And when you've got concerns around what insurers will pay for pharma or for biotech, this is a space that investors have been focused in, and it looks very, very attractive. And if you want the whole sector, you can buy an ETF IHI, which will get you the whole basket of medical device companies. And actually, that's a great way to invest in it as well.
I'm looking at some of the headlines for Medtronic recently, and I understand there's been increasing competition from Abbott and Boston Scientific. So how do you view the competitiveness in this field?
Certainly, it's a very, very competitive space. And you get competition from other companies like J&J. These are highly competitive spaces because they're big markets. Mm-hmm. But I think that the important thing is here, I'm looking at for industries where there's a growing pie. And you can have lots of competition in a growing pie. If you've got unique devices, there's specific markets that you can continue to open up.
Okay, his other past pick on May 25th, 2016 was Honeywell International, then recommended at $114.06, now $131.85 for a total return of 18%. What's your view on Honeywell?
So look, this is really interesting. In April and May and June of last year, we had a number of sectors turn up relative to the market. And we went from sectors that were driven by monetary policy and low interest rates doing well to a world where for the last year it's been sectors that are driven by earnings and economic growth. And so industrials have been a key theme for us over the last year. And I've got another one to talk about today. And realistically, we're seeing capital spending pick up in the U.S. The last 2 quarters, if you X out oil and gas, capital spending is growing at over 12%. So Honeywell is part of the Internet of Things, mm-hmm. and their connected devices, things with chips attached that help in manufacturing. But of course, Ingersoll Rand is in there, Eaton Corp is in there. There's a number of great companies in the industrial space that are behaving really well and are really under-owned by investors.
I understand that Honeywell's been facing some pressure from an activist investor to spin off the Aerospace division. Do you like that idea?
Well, look, I would never bank on it. Would it be a positive thing? Probably. Companies tend to get a better valuation as a purer play. Mm-hmm. But, one of the things that I like about Honeywell is their connected monitoring systems for equipment. And that would be a purer play then. But I'm not going to bank on that.
Okay, and the final past pick we have to bring you today is BlackRock, which again was recommended almost exactly a year ago today for a total return of 11%. All right, BlackRock.
Yeah, again, we're talking about a theme that's been going on over the last year. Asset managers, I think, are very attractive. As much as I believe that the opportunity to make money is far better in the hands of an active manager, especially in a world where correlations stock to stock and sector to sector are the lowest they've been in 15 years, there is an undeniable move for investors to buy index products. And of course, BlackRock is the leader in that space.
Okay, we're going to have to take a short break, but we'll be right back with more of your questions. Still lots of time to get in touch with us with your questions for David Burrows. Our number is 1-855-326-6266. We'll be back in a flash.